Welcome. Today we're doing a deep dive into something we call the deadline effect. You know, those budget day tax changes that can just hit the property market, boom, overnight.
Yeah, it's all about those sudden cutoffs. They can make a huge difference financially.
Tens of thousands of pounds sometimes.
Exactly. So our mission here is to analyze the patterns. We'll look at past examples, SDLT, CGT changes in the UK, and connect that to the current buzz, maybe around an autumn budget 2025.
Right. Give you a shortcut to understanding how this works and what you can actually do about it.
We've got plenty of research on how these deadlines operate, especially those UK precedents.
Okay, so let's unpack it. The chancellor stands up, announces a change, and often it's effective. What, immediately? From today or from midnight?
Or sometimes a fixed date, like the start of the tax year, April 1st.
Why so sudden? Why not give people, say, a month's notice? Seems a bit harsh.
Well, the Treasury wants the tax revenue. If they gave you warning, everyone would rush to complete deals under the old, maybe cheaper rules. They'd lose out. Ah, okay. So it's about maximizing that immediate income.
Pretty much. And the absolutely crucial thing for you to remember is the trigger point. It's almost always the completion date.
Not when you exchange contracts.
No, not usually. It's when the money actually changes hands and the deal is fully done. That's the date that counts for tax purposes.
And that's why we see that mad scramble to get deals over the line before the deadline hits. Solicitors must dread it.
Oh, absolutely. Remember the SDLT holiday during the pandemic?
Yeah, the one that ended in stages, June and September 2021.
The market went into overdrive before each of those cutoffs. Conveyancers were working around the clock, literally, to push completions through a massive surge.
That's the deadline effect right there, isn't it? This huge spike in activity.
Yeah, completions soar, surveyors, conveyancers are totally stretched thin.
And then, poof, the market just slows right down once the window closes.
Exactly. It massively distorts the market flow. And interestingly, give the government these big, but very short-term spikes in tax revenue. So it's a known pattern. Are there examples happening now?
Well, look at the furnished holiday lettings regime. The government's abolishing it.
Right, I heard about that.
Landlords know they have until April 2025. That's a fixed deadline, a window to either sell up or restructure their affairs. So you're seeing activity ramp up now because of it. Same principle, just a longer fuse.
And meanwhile, the rumor mill is churning about new potential changes.
Always. There's talk, speculation about possibly scrapping stamp duty land tax entirely.
Really? What would they replace it with?
Maybe some kind of annual property tax, perhaps a national levy, or the mansion tax kicking in above a certain value, say 500,000 pounds. It's all just talk for now, though.
But that talk alone can influence behavior.
Definitely. So the lesson from history is pretty clear. Timing is critical. Acting early usually pays off.
Like the 2014 SDLT changes.
Yeah, exactly. That shift to progressive bands was better for most buyers. But if you were already buying an expensive property, completing before the change could save you a fortune compared to the old slab system. We're talking significant sums.
So for you listening, what's the practical advice here?
If you're involved in a transaction anywhere near budget day or the end of the tax year, you need to be on high alert.
Track that legal pipeline like a hawk, I suppose.
Absolutely. Buyers, sellers, agents, everyone needs to be aware. Maybe bring listings forward if you're selling.
And maybe budget for the worst-case scenario. Assume you might pay the higher tax rate.
That's smart planning. Always budget for the higher potential rate, just in case the rules change mid-transaction. Gives you a safety net.
Agents should probably flag any sales completing near those key dates, too.
For sure. And remember, this isn't just about the prime market stalling. When tax changes hit the top end, that effect ripples down.
Ah, right, through the whole housing chain.
Yeah, it impacts contractors, architects, suppliers. The whole ecosystem feels it.
So, the core takeaway seems to be, every reform has a deadline, and that deadline creates a rush. The key is knowing if it's exchange or completion that triggers it.
Usually completion. And the market really, really dislikes surprises.
Yet it seems to live with the constant threat of them.
Which leads to a final thought. If just the rumor of a tax change is enough to make buyers pause and sellers rush,
Altering behavior before anything even happens.
what does that tell us about our fundamental need for certainty when making big economic decisions? The fear itself impacts the market right now, even if the change never comes. Something to mull over.